Group of 7 finance ministers agreed on Friday to impose a price cap on Russian oil. They aim to slash revenues for Moscow's war in Ukraine while keeping crude flowing to avoid price spikes. The price cap per barrel is still being discussed. In a statement, U.S. Treasury Secretary Janet Yellen said the cap would put downward pressure on global energy prices, quote, while denying Putin revenue to fund his brutal war in Ukraine. The aim is to introduce it starting in December, timed with planned EU sanctions on Russian oil. The ministers are seeking a broader coalition of countries to buy Russian oil products at or below the price cap. But some G7 officials fear it will fail without participation of other major economies, such as China and India, which have sharply increased their purchases of Russian crude since Moscow launched its invasion in February. But others say China and India have expressed interest in buying Russian oil at an even lower price in line with the cap. Enforcing the cap would rely heavily on denying London-brokered shipping insurance, which covers about 95% of the world's tanker fleet. It would also mean denying finance to cargoes priced above the cap. But analysts say that alternatives can be found to circumvent the cap, and market forces could render it ineffective.
The stakes in an energy war between Moscow and the West over the war in Ukraine were raised on Friday, with the group of 7 rich countries agreeing to try to cap the global price of Russian oil and Russia delaying the reopening of its main gas pipeline to Germany. A deadline had been set for Saturday to resume gas flows via the Nord Stream 1 pipeline, one of the main supply routes to Europe. But that deadline was scrapped, with Russia's state-controlled energy giant Gazprom blaming a technical fault. Gazprom said it couldn't provide a timeline for when deliveries will resume. The announcement deepens Europe's difficulties securing fuel for winter as it faces an energy-driven surge in living costs. Moscow has blamed sanctions imposed by the West after Russia's invasion of Ukraine for hampering routine operations and maintenance of Nord Stream 1. Brussels says Russia is using gas as an economic weapon to retaliate. Earlier on Friday, finance ministers from the G7 wealthy democracies announced they would impose a price cap on Russian oil with the aim of slashing Moscow's revenue and avoiding price hikes. Moscow said it would halt oil sales to countries imposing the cap. While key details such as the per-barrel price level are still to be resolved, the White House says collective efforts are already working.
The impact of our efforts to implement a price cap is already bearing fruit. Reports show that Russia is already offering steep discounts, as much as 30%, and long-term contracts to some countries.
All of this comes as Moscow and Kyiv trade blame over actions at one of the war's most dangerous front lines, the Russian-occupied Zaporizhia nuclear power plant, where fears have grown in recent weeks over a potential disaster.
U.S. job growth rose slightly more than expected in August as the Labor Department's closely watched employment report on Friday showed employers hired 315,000 workers last month. But wage growth slowed and the unemployment rate ticked up to 3.7%, which could ease pressure on the Federal Reserve to deliver a third 75 basis point interest rate hike at its policy meeting later this month. Jesse Wheeler is an analyst with Morning Consult.
This jobs report will be a very welcome sign for Federal Reserve policymakers. Labor force participation increased, which will relieve some of that pressure on a very tight labor market. And at the same time, we're not really seeing too many layoffs. Wage growth has slowed somewhat. So all of these are, very good signs that those increase in interest rates are, slowing the job market and the economy, but are not taking a very heavy toll on the labor market as of yet.
U.S. stocks opened higher on the news as the jobs report lifted investors' hopes that the pace of interest rate hikes could ease. While the unemployment rate rose, it came as more than 780,000 workers entered the job market, pushing the size of the labor force to a record high. The broad increase in hiring last month was led by the professional and business services industry. The healthcare sector also saw a large increase in jobs. But leisure and hospitality payrolls slowed sharply. Employment in that industry remains more than 1 million jobs below the level it was at before the global health crisis.
Weeks after the FBI's unprecedented search of former President Donald Trump's Florida home, unsealed court records revealed that more than 11,000 government documents and photos were seized, with some classified documents found among such common items as books, magazines, and newspaper clippings. The Mar-a-Lago search on August 8th was part of the Justice Department's ongoing criminal investigation into whether Trump illegally retained national defense information and tried to obstruct the DOJ's probe. One record unsealed on Friday showed that of the more than 11,000 government documents and photos that were seized, 18 were labeled as top secret, 54 were labeled secret, and 31 were labeled confidential, according to a Reuters tally of the government's inventory. There were also 90 empty folders, 48 of which were marked classified. It is not clear why the folders were empty or whether any records could be missing. Friday's unsealing of records by a U.S. district judge in West Palm Beach came one day after she heard arguments by Trump's attorneys and Justice Department prosecutors over whether she should, at Trump's request, appoint a special master to conduct a review of the seized materials. And while the judge appeared open to appointing a special master, she deferred ruling on it immediately. Trump's former Attorney General William Barr on Friday questioned the usefulness of a special master, telling Fox News it was a waste of time and saying that he saw no legitimate reason for Trump to have documents at his Florida estate if they were classified. Barr, who left the Attorney General post in late 2020, defied Trump by not backing his false claims that the presidential election that year had been stolen from him. Trump's defenses for why he retained the materials have shifted and include an assertion that he declassified all the documents. Barr on Friday said he was skeptical of Trump's claim, calling it highly improbable and, if true, shows such recklessness that it's almost worse than taking the documents.
Wall Street closed out the week on a down note Friday after early gains from a jobs report that showed the labor market may be starting to loosen gave way to worries about the European gas crisis. The Dow and S&P 500 each finished 1% lower, while the Nasdaq dropped 1.3%. Tyler Ellegard, a portfolio manager at Gradient Investments, explained the reversal of fortunes for stocks.
Well, this morning was pretty positive. I mean, we had a good jobs report. 315,000 jobs were added. Unemployment ticked up to 3.7 from 3.5, which historically is still a very low unemployment rate. But then as we hit about 11 o'clock, 12 o'clock p.m. Central Time here, we had reports of the Nord Stream 1 pipeline was supposed to be opened on Saturday after a 3-day shutdown. But that is going to be delayed. Unfortunately, they had some technical issues. So the extent of how long that shutdown is going to be at this point is a little bit unknown. And so having those issues in Europe persisting and the uncertainty around whether households or businesses are going to be able to operate, is a bit concerning. And so that's really when you saw the sell-off in the markets up to this point.
Megacap tech stocks fell, with shares of Apple, Microsoft, and Meta Platforms all losing ground. Energy stocks rose as oil prices gained nearly 2% after Russia scrapped the deadline to resume Nord Stream 1 gas flows. Also on the positive side were shares of Kohl's, after Reuters exclusively reported, citing people familiar with the matter, that private equity firm Oak Street Real Estate Capital made an offer to acquire as much as $2 billion worth of property from the struggling retailer and have it leased back its stores.